Welcome. Today I'm joined by Sonja Blackburn of Access Insurance to talk about small strata insurance and everything you need to know. Sonja, this isn't our first appearance together. We did the BC Strata Tech a couple of years ago, and Access has grown across the country since then. Tell us a little bit more.
Yeah, we've grown quite a bit over the last couple of years. Thank you, Thomas. And we've got lots of new information out there. A lot of changes have happened over the last couple of years. I'm happy to elaborate a little bit more on that and how each strata corporation, especially smaller strata corporations, can take advantage of those opportunities.
Fantastic. Well, let's get straight into it, Sonja. This is a conversation about small strata insurance. What constitutes a small strata?
A small strata would be anything, I would say, but under 4 stories, 4 to 5 stories, usually under 30 units. I would consider a smaller size strata, mostly because that means there are going to be fewer members involved, as well as maybe smaller contingency funds and a few less decision makers. So this is really geared towards that group of stratas. However, a lot of the information can be applied to many different areas of strata insurance.
Absolutely. That is actually the largest number of stratas in this province are those that are smaller. So what do they need to know about strata insurance?
Well, strata insurance is very important. I guess it's a requirement by the Strata Act. So what's really important to know is that there are two areas of strata insurance offerings. Both one will be for the building as a whole or the common property, and then there will be areas of strata insurance that are for the individual unit owners that are not covered by your typical strata policy. Those things being personal belongings, any unit improvements and upgrades, whereas the overall strata policy covers every single unit owner as an insured and or tenant, and all common property or the building as it was first built, including fixtures.
As first built. So that means that if you've done something inside of your unit, you need to have special insurance for that.
Correct. Yeah, the original strata policy will only cover the original fixtures and upgrades to, no upgrades to the unit. You will need to have your own personal policy in place to cover any unit improvements and betterments. That simply being is that with so many unit owners, it is not possible for one policy to cover the differences and upgrades in every single unit. So it is best covered under individual policies for each unit.
Right. So the strata insurance covers your unit's basic original built existence plus all of the common property plus the grounds and liability. Is that right?
That's correct, yes. The unit owners will still need to purchase their own personal liability insurance as well, which is afforded by the unit owner's policy. So it's important that they have that also in place, that individual unit owner's liability policy covers you anywhere in the world, whereas the strata policy will provide premises liability coverage only. It does not expand to provide coverage for you outside of the common property.
Fantastic. So tell us about the master policy and what's included there.
So the master policy is going to include the common property. So that's going to be any lobbies, entranceways, fitness centers, exterior landscaping, roads, if there are any. All of those things are going to be considered common property. The unit owners need to purchase their own property for anything that's inside their four walls. So if they've got any new light fixtures that they put in, any appliances, any unit improvements, new flooring, window coverings, all of those types of things will be covered under a personal unit owner's insurance. In addition to that, there are many ways that the two policies work together, which is really important to know how those two things work, in that both policies are going to have what's called deductibles, and those deductibles are going to be the portion of the loss that's assessed to the strata. So that will depend on the cause of loss, whether it be a fire loss, a water damage loss, flood loss, earthquake loss. All of those losses will have a deductible in there, and the unit owner's policy is the one that will come in to pick up any of those deductibles that may or may not be assessed against the individual unit owner.
Excellent. So talk about the challenges of small strata insurance.
Yeah, so smaller stratas do have a number of different challenges that aren't common to the larger stratas and vice versa. One big thing for smaller stratas, especially newer smaller stratas, is that the contingency funds are quite small. They have to start somewhere. There's nothing wrong with that strata if they've got a contingency fund or a small maintenance budget. What's important to do, though, in order to offset that, is that you do have adequate insurance to cover those types of losses, including the policy deductibles. So policy deductibles will usually come out of a Strata's contingency fund. Those deductibles can range from anywhere to from $5,000 to even $1,000,000. So being aware of what kind of deductibles are in that policy and ensuring that you have adequate coverage for those deductibles when you are a smaller strata is very important, as otherwise those deductibles will be assessed against the individual unit owners, and everybody might not have the money to pay for that. So keeping that
Yes.
in mind and being aware of that is important.
I talk about special levies a lot, so that is something that is very relevant to us, and we have definitely seen levies for insurance in the past. So, no, a really great point. This comment about managing risks with fewer units to spread the costs. I mean, I think that's just a natural fact of it being fewer units in a building. What other size challenges do you see?
Well, there are a number of different problems as well when it comes to smaller stratas. Those being that you've got fewer directors on the board, right? So you've got fewer people volunteering. It is a volunteer gig, and it's not going to be everybody's full-time job where they know all the ins and outs of strata. So making sure that you are communicating, having really good record taking and notes as you're doing things on the board, so that the information is passed on to each new member that jumps on there with you, is really important. In addition to that, taking care of the small maintenance factors. So things like keeping track of when the individual hot water tanks are replaced within units, keeping track when updates are done. All of those things can really provide a good benefit when it comes to insurance renewal, as far as premium goes, as well as avoiding losses and avoiding having to pay those deductibles.
Makes sense. Deductibles are a big theme in insurance. They have been for 5 years, as they started creeping up from a couple $1,000s to, as you've said, up to $1,000,000. Um, how does that play within the strata environment, and what's that relationship between the strata policy deductibles and you as an individual owner within a strata community?
Yeah, so how the deductibles work in strata insurance is that's the amount of the loss that is apportioned to the unit owner or the strata corporation as a whole. When you have larger catastrophe type losses such as earthquake, flood, things like that, you're almost always going to see higher deductibles, be it anywhere between 25,000 to $1,000,000 or more, depending on the size of the building or the total insured value. Those deductibles will generally be applied against the corporation as a whole because they can't be assigned to an individual unit. What's really important is that the corporation has enough coverage in their contingency fund to pay for those deductibles, and or looks at other options to cover those strata deductibles. Biggest way and easiest way to do it is making sure that every unit owner has their own personal policy in place. Most of those policies do include coverage for strata deductibles, and you can get those deductibles covered off that way, and it is essentially included in their annual premium, so at no additional cost to the overall strata. Remembering that each unit owner isn't insured under the strata policy, so it affects everybody as a whole, and everybody also benefits from this as a whole, so it's not a downfall. Usually the only time when unit owners can be liable for the strata's deductible is when there is a bylaw put in place allowing the strata to apply that bylaw against the unit owner, or if the loss originates within the unit or is caused by that unit owner. So it's important to be aware of what your bylaws are, make sure that you do pass those bylaws to allow the strata to make those decisions, as it will benefit your overall insurance premiums as well as your claims history if you have these types of options in place. In addition to that,
Interesting.
there's contingent coverage, which is something that is really very not often spoken about. So in the event there's a shortfall of coverage in the strata's policy, the individual unit owners' policies will come in to pick up any shortfall in common area property, but only if there's been a bylaw placed. So make sure you take time to talk to your broker about that.
Interesting. So one of the things about these deductibles and who's responsible for them, if there's a plumbing leak or a sprinkler system leak in the hallway, that's a common cost that comes out of your, contingency reserve fund if those funds are available. Uh, if it if a leak originates within your unit, the strata will attempt to charge back to you for that deductible, and that's where your personal lines policy comes in play. Is that right?
Correct. Yeah, they can, depending on their bylaws and depending on the cause of loss. So each occurrence is not necessarily always the same. However, it's very important that you have both policies in place to avoid any shortfalls.
Fantastic. Fantastic. So there's a mix here between what's required and what we typically see, but is technically optional. Can you tell us a bit about that?
Yeah, so the Strata Act requires every strata to provide basic coverage, I guess, or major peril coverages, that being fire, water escape, vandalism, windstorm, hail, explosion. There are what's called our named perils options. There are a number of different insurance coverages, though, that are optional, which we'll go over later, that are equally, if not even as important. They also require that you have a 2 million liability insurance. This is general liability only, which is bodily injury and property damage. That means if you've got your volunteer neighbors shoveling the sidewalk, they fall, they sue the strata, or if the neighbor falls and sues the strata, that's your general liability coverage that will kick in place. Or your property damage, let's say the strata cuts down a tree and hits a neighboring property, that would also be a general liability claim. What that doesn't include is errors and omissions. So let's say the strata makes a decision on behalf of the entire building to hire, let's say, XYZ Mechanical, and they do a poor job, and the strata loses a bunch of money, and we've got upset unit owners about this money that's been spent. That would be an errors and omissions type of loss. So that's why it's very important that you do purchase or consider the strata directors and officers insurance. As we mentioned, most strata directors are volunteers and not professionals in this field. So having them covered as well as their personal assets is quite important.
Interesting. So I didn't want to fully skip over that subject of the optional coverage, but earthquake is among it?
Yes, earthquake, believe it or not, it is an optional coverage, even though we are in the earthquake zone, earthquake belt. Uh, it's extremely important to consider this option because that could be one of those decisions that a council makes that other unit owners get upset about that were not purchased. There are a number of ways to purchase earthquake insurance, as the deductibles are also quite heavy. Those are those million or 2 million or maybe even $3 million deductibles that you might see out there. So it's really important to weigh and consider those options. Another one is the
So,
equipment breakdown.
mhm. On earthquake coverage, in small stratas, I sometimes only see a percent. Used to sometimes be 5 or 10%. Now it tends to be 10, 15, sometimes even 20%. But some have a minimum of 100,000 or a minimum of 250,000. But in a lot of small stratas, I don't see that minimum. It's just 10%. Can you explain that?
Right. Yeah, so that's a benefit. You will see if a smaller strata might have the option of not having a low dollar amount and only a percentage. What's very important to know is that percentage is applied regardless of the loss. So even if it's a small tremor or a small shake, only the foundation is cracked, or maybe only all of the building glass is cracked. That 10% applies to the total insured value. So if you've got a $5 million building, that is the total insured value of the building, your automatic earthquake deductible is $500,000. Regardless of the loss, doesn't matter if it doesn't reach that amount, that is the amount the strata will be responsible to pay. This is catastrophe type coverage, so it makes sure that the insurance company can pay everybody's losses and not just one. There are a few options to insure that deductible, though, that are important to consider. That's by either purchasing an earthquake deductible buy down policy for the strata as a whole. What I do see sometimes, and especially with smaller stratas that maybe have lower reserves or less money in the contingency fund, maybe they want to put that money, they don't have enough members that want to put that money all towards an earthquake deductible buy down coverage. But maybe there's an individual unit owner that wants that coverage and is not happy without having it. You can purchase it for your individual unit as well. It's important to know that
Fantastic.
both options are available. Yeah.
And let's talk about the premiums. This was a huge story in BC 5 years ago as premiums and deductibles both went up. Now what's happening?
Yeah, so it's really exciting to see a lot of the premiums are leveling off. There was a number of reasons why we saw huge premiums. I mean, largely it was due to underrating in the rates for a long time that weren't keeping up with the amount of losses that were being paid. So that was a big portion of it. Another reason for it being was insurance companies weren't getting the return on their investments. The interest rates were super low. So where they would have normally made up for that, those low premiums, not paying for the losses, they would have gotten back in investments. That wasn't happening with the economy. And then, of course, there's been world losses with the increase in fire and flood and everything, all these catastrophe type losses. They've hit the insurance industry as a whole. And unfortunately, everybody's kind of paying for it. What we are seeing, though, is that it is leveling off. It seems like they have gotten their premiums to a level where they feel that they're comfortable. Interest rates have come up a little bit, which is great for the insurance companies. So they're seeing a little bit more return on their investment. And they've also seen a lot of stratas are becoming more aware and understanding of risk mitigation practices, being up, getting their updates done, getting new roofs in, or even just providing that information in. So those are the people that are really seeing the biggest benefit on premium savings and reductions, and the others are too. But the ones that aren't getting those losses are starting to get a little bit of a payback as well, which is nice.
That is nice. I mean, it seems surprising that perhaps ours are falling in a world where there seems to be bigger and bigger and more frequent cat losses, these catastrophic losses. But
Yeah,
I think it's sort of the localization of what happened in our insurance space over the last several years that's allowing ours to soften slightly. Um,
correct.
Talk to us about what claims history means for small stratas when it comes to getting their insurance.
So it's really important to know the impact of claims history on your pricing. So it doesn't matter about the size of the claim. It can be a small claim, a big claim, whatever it is, every claim is going to have some form of effect on the renewal of your insurance. You may or may not see it on the first go, but you might, if you have subsequent claims being a second or third claim, that's where you get into the problems of insurability. You'll see some markets saying we don't want to provide coverage for this type of building, those types of things, unless you're getting the updates done and showing your risk mitigation practices. Where it doesn't impact as much as if, let's say, you've got one claim as a car impacted on the building, and the other one is going to be, somebody left a bathtub overflow on the fifth floor. As long as you don't have multiple claims of the same nature, that's where it becomes really ugly. So
Got it.
it's important you talk to your broker before submitting a claim. Of course, if it is a risk mitigation, you need to get somebody in there to start drawing or whatever it may be right away. By all means, start that, but have the conversation with your broker, your property manager, before submitting a claim.
I think a lot of that became involuntary over the past few years. When you saw the deductibles climb so dramatically, a lot of losses that may have been claims in the past, because they may have exceeded a $5,000 deductible, didn't exceed a $75,000 deductible. So there's been, I guess, a natural decrease in claims, even if the losses have continued.
Correct, yeah. So one area that we do tend to see multiple claims, and it can be a pain factor, especially when you start getting other claims in, is glass-related claims. So window breakage. When you've got 1, 2, 3, 4, 5 glass-related claims in a year against a package policy, that can definitely impact your claims because they do tend to have those lower deductibles. That's a coverage that you want to place. Great, but I highly recommend considering a separate glass policy that then will not affect your premiums on your package policy.
Oh, interesting. Good tip.
Mhm.
And some of the flags.
Some areas to think about. So under insurance risks and consequences, big thing is make sure you have your appraisal done, your building appraisal done. It is not the same as a real estate appraisal, meaning it is not as expensive, but it is also very different information. So we are looking for what does the building cost to rebuild, including taking all that debris away in the event of a total loss or fire. So that is very different than a real estate appraisal that has a building that applies depreciation and includes the land, which an insurance appraisal wouldn't. That is a strata corporation's biggest safety net when it comes to Underinsured losses, when if the unit owner comes to you and said, hey, what did you do here? Why didn't you do this? Well, guess what? We did the best we could. That's your best way of saying that. If for whatever reason you can't do that, make sure you are reviewing those limits and increasing those limits every year with inflation, because you can be affected by what's called the co-insurance clause. So that co-insurance clause gets applied if you are ever underinsured. In partial losses, they will only pay a portion of that loss. It's a little bit of a math procedure to explain, but I'm happy to provide that calculation for you in a handout that you can talk about with your corporation. If you want to email me later, I can send that to you. But that's really important for you to know. Also know that individual policies that we talked about before, those strata policies, they provide a little bit of a bump up in there. So gone are the days where you used to get the 130% replacement cost benefits. Those aren't there anymore, and if you are getting them, you're probably paying a pretty premium to have that additional benefit, but you've already got the coverage by the individual unit owners policies. So keeping track of those individual unit owners policies, passing a bylaw, making sure everybody has it, that will provide you guys all the safety net of making sure you don't have underinsured losses. And you can do that by
Excellent.
talking with your broker.
Coverage gaps. Does this mean perhaps not having earthquake or other coverage?
Yeah, there's a number of extensions, and again, some of those are going to be identified by that appraisal. One big one is bylaws. So especially in older buildings, a number of bylaws, especially in Vancouver, Burnaby, different cities, now you have to have seismic upgrades done. Now you have to have sprinkler systems involved. These are all betterments and not necessarily automatically included in your package policy. So being aware of what bylaws your building is going to be affected by in the event of a loss and making sure you've got adequate coverage for that is really important. Other areas are extra expense. So let's say they've got to bring in generators from somewhere else. In a flood situation is a good example, and this is a real claim situation for me. I had a client had to get generators brought in from Milwaukee because we were out of generators locally. So they had to fly them in. That's an extra expense. That was to get the claim dealt with quicker. So that is an additional coverage. Equipment breakdown coverage. The only coverage that will provide mechanical breakdown and insurance. Like literally, if it breaks, we'll come fix it. Make sure you have it. It's not that expensive and it's something to look at.
Fantastic. No, that's a really good tip. And I understand you have some more tips for us today. Speaking as a Strata insurance agent, what are the top tips?
I think biggest thing is just being aware of all of your updates and maintenance upgrades that you've done in the past. Those are really key to each renewal and making sure that your premiums stay reasonable. Another one is going to be making sure you keep a record of the hot water tanks in the building. Some insurance markets will actually give you extra discounts of that. It's not onerous if you do it throughout the year. It's a pain though if you do it at renewal time. So keeping all of that record keeping is really important. Also, make sure you talk to your broker. Your property manager is going to be really helpful in facilitating the renewal process for you. However, they are not a licensed insurance professional, and we work together with them. So avoiding that third party information, give us a call, ask us the question. Well, welcome. We're happy to join your AGM either by Zoom or for if your broker is local, maybe they can come in person. We love having these types of conversations and meeting our clients, and it's much better that in a claim situation if things are properly communicated. Because most 9 times out of 10 a claim goes poorly because there's been poor communication somewhere. So updating that application year after year, talking to your broker is probably your the best tip.
That is fantastic. Thanks, Sonja. I'm going to turn over to a couple of questions. Before I do, I've got one myself. What is the one thing you really want Strata councils to know about Strata insurance?
I would really love for them to educate themselves as well as their ownership on the Strata insurance coverages, as well as encouraging them to ask their questions about their personal policies. There is a lot of overlap in the two policies that it's really important that you know. The two policies are going to be purchased 9 times out of 10 with two different agents, so they're not going to talk to each other. And if you in a claim situation, one is not going to know what the other one's doing. So really important that you're aware of what type of coverages are available to you.
Fantastic. Um, You hinted at this earlier with respect to hot water tanks, but what always seems to take longer for a property manager or strata council to get answers for?
Uh, when it comes to updates, I think the problem is a lot of times there are property managers that have maybe changed from one year to the next. Maybe there's a new property manager, maybe a new firm. They don't have that information readily available. So again, keeping track of those updates, and maybe we can provide you with a form where you can write it as they go along, so it's readily available at renewal time is probably is my best recommendation on that.
Excellent. Just a couple more now from listeners. Our strata was built in 1982. What makes the older buildings more challenging, and how can we get better terms?
So a problem with the older buildings are usually the updates. So if an older building is fully updated, it's usually a non-issue. If you don't have the information, maybe again, you are not the same council that was there in 1990, you can get that information by getting regular inspections done. If those inspections show that those updates are fine or don't need updating, then usually it's a non-issue. Aside from that, another issue is the type of plumbing or type of materials that were used in building the building. That can sometimes present an issue as well. But again, to get better terms, have the conversation with your broker, keep maintenance records and updates, get the inspections.
Excellent. Asked by someone who's had a claim for a leak in 2022, and then in 2023 they replaced the roof entirely. How come their insurance premiums and deductibles didn't reflect it?
Uh, as far as it didn't reflect the loss or didn't reflect the update of the roof?
I guess the combination of those two things. You then had obviously a loss, so that goes on to your records. But when you replace your roof, that should hopefully mitigate most of what the original issues were. How should a strata in that position attempt to negotiate their policy renewal, given that they've done that major upgrade that was the cause of their loss?
Yeah, so it really depends on the cause of loss and the amount of loss. So if it was only affecting that one floor or two floors, what I would say is, hey, let's look at other markets. Let's see what other markets are going to offer us. But I'd do that right away. If it's a large loss, so let's say it went through all floors, all 6 stories. I had one that happened on the 18th story, and I think we're at over $3 million right now. Those guys aren't probably going to be successful on remarketing that one until that loss has been finalized. But again, once the roof is updated, we can bring that to the insurance company. We can show them other mitigating factors that you put in place. And usually we can get some favorable terms, even if it's just reduced deductibles.
Fantastic. Well, I encourage anyone who's looking for their strata insurance to call Sonja. Her number is at the bottom of your screen, or 1-604-629-6271. Sonja, I appreciate you joining us this week. Next week, we'll have David Locke of Duca Property Management talking about the condo turnover transition and what happens as developers pass the torch to strata councils. Sonja, thank you. Let's do this again.